Hello, Oracles! Well, Tesla was green today, but the rest of the market was red, and because this video is about the broader market, unfortunately I'm going to be wearing the red shirt. But don't you worry, tomorrow morning we'll have the green shirt on. So what happened today? Well, we saw the CPI data come out that we were all anticipating to see if we are seeing an inflection point down, how bad did the Russia-Ukraine situation affect inflation, and so the numbers all came in at expectations. So that was a good sign. The core inflation actually came in lower than expectations, so that was a great reason for the market to rally today. That's why we initially saw that rally go from most of the day. But as the day went on, we saw that sell-off happening. Why is that? Well, the reality of the situation is when you're expecting horrible things and you get bad things, that just means that it's better than horrible, but you're still bad. Inflation is still high. We are at a 40-year high for inflation. That's not a good thing. So what are we looking at now? So now we're looking at the Fed and what is their next move going to be? Well, because core inflation came down, this could be signaling a little bit of an inflection point down. So perhaps this is a signal to the market that the Fed is only going to be raising the rates 25 basis points versus the 50 basis points that we were sort of anticipating based on what Brainerd had said last week and what the president had said yesterday. And so expectations for year-over-year inflation were 8.4%. We came in at 8.5%. Not a big deal being off. That's a year-over-year. The month-over-month was more important, and the month-over-month was 1.2%, which was in line with expectations, but that's still super high. That's unbelievably high. So we need to see that starting to come down. So the positives from this were, yes, we came in line with expectations, and we came in lower on the core inflation numbers. That's a good thing. That is in the direction we want to be moving. The bad thing is, like we said, it is still extremely high inflation. So again, what the Fed is looking to do is a soft landing. What a soft landing is with this is they want to raise the rates in a way that it brings inflation down and does not cause a recession. So when you start to dig into the numbers a little bit, you will see when it comes to inflation, in order for the Fed to do a soft landing, they need to make sure that consumer spending is still high, because a recession is a GDP, a negative GDP for 2 quarters in a row. Well, how do you keep the GDP up while bringing inflation down? You need to make sure that consumer spending is still on the rise, and you want consumers to still be spending their money, but you want them to be spending their money on stuff that is coming down in price. If the prices are coming down too fast from inflation, what consumers end up doing is waiting to buy because they're like, well, prices are coming down. I don't need this product right now, so I'm going to wait until the prices continue to come down and maybe hit a bottom. And this is basically like the consumers trying to time the market with prices on product. And so when you're doing that and people just waiting and waiting and waiting to buy, you're never going to see that GDP growth because nobody's spending money because they are all waiting. And this is a reason why the Fed likes to keep the interest rates and inflation at around 2 to 3%. Because if we're at around 2 to 3%, it's not, prices skyrocketing higher than people can maintain and keep up with, but it continually encourages people to spend their money now rather than later because they always know that later the prices will most likely be going up a little bit. So that keeps the economy moving in a positive direction. So when we're trying to reverse that course, you don't want to reverse it too fast because again, that's when people will stop spending money. So we are looking at some good things. When it comes to travel, people are still out there spending money. They're spending money on travel, reservations, stays at hotels and getaways, rental cars. That inflation is still going up, which is it's not a great thing, but it's good because that indicates that people are still going out and spending money. And so we do still have a very long way to go to get to a soft landing, but this is a good first sign for us heading in that direction. Tomorrow we are going to be getting JP Morgan having their earnings, and they will put out their percentage possibility of what they think a recession is going to be. Currently it's around 27%. So we need to see what they have to say. Still a lot of time to get from now until when we think a recession might end up happening. A lot of things to get through before then. But again, this is a good sign pointing that perhaps it might not come to that. And so this information gives the Fed a little bit more wiggle room as far as whether they need to do a 25 or 50 basis point rate hike. So are we going to rally from here? Are we going to keep coming down? Looking at how we traded today, obviously the market cheered the inflation numbers that we got and then sold off as the day went on. So was it a fake out? I don't know. We did rally a little bit into close, but we still finished red. And so we still have some information to get through. Again, we have the JP Morgan report tomorrow, and we are expecting the PPI tomorrow as well. This is the producer price index. This shows the inflation when it comes to the producers of these products. So we will see what the inflation numbers are looking at for that. So there could still be a little bit of uncertainty that may have been why we saw the sell-off and then a little bit of a rally at the end of the day today. I'm still not at a point where I want to go buy all in. You know, the market and the inflation are still very high. So we still have a lot of uncertainty in the market. And now one little key piece of information that I noticed this morning was crypto has been a leading indicator for the markets. I noticed this morning around 7:10 a.m. Eastern time, crypto started to climb up quite quickly. And then surely thereafter, 8:30 came out, we got the CPI data, and then the markets rallied afterwards. So is this related? I don't know. I mean, I don't know who has that information ahead of time, what's going on. I don't know if it's just a coincidence, but it has been a leading indicator lately as far as what the markets are planning. So I'm going to pay attention to this tomorrow morning before the PPI comes out and see how crypto trades, because that could be a good indicator as to how the markets move. Now, 7:10 a.m. Eastern time, you can buy pre-market. So if you trust this theory, you can theoretically take a look at the crypto, and if it starts popping, perhaps buy some of your favorite stocks early on before we get that information come out, and then we might see that same rally. I do not know if the PPI is going to affect the market the same way the CPI did. That is yet to be seen, but that's just a little thing that I had noticed this morning with the crypto. And so some of the moves that I made today, I bought a little bit more Tesla early this morning at $9.93. I bought some AMD at $96 and at $94. So I averaged about $95 when I bought in, and I'm now going to do a recurring buy on AMD every Monday, Wednesday, and Friday to start building up my position in AMD. And so for me, with my strategy, I don't think we're going to see as much of a sell down as we were anticipating with a horrible inflation number. But for me personally, my gut is still telling me we still have uncertainty, so we may not see as much of a sell-off, but I still think that we are going to have more of a red April than a green April. So lots of things going on. You know, let's see how earnings go, because tech earnings are going to be starting at the end of the month. Then we've got the FOMC meeting on the 4th and 5th of May, which is where we're going to find out, is it 25 basis points or 50 basis points that they are going to raise the interest rates? Based upon the information today, seems like we might be going with a 25 basis point hike, which means that we might not be selling off as much. Again, last time when we saw this going into March, we were still selling down, anticipating a 25 basis point hike. So we still sold down going into that. When we got it, that's when we rallied afterwards. We may end up seeing the same movements going on this time. And so to wrap it all up, yes, we beat expectations, but expectations were high. And so we came in high. We came in what we thought we were going to come in at. That is good, but still bad. So we still need to pay attention to this, make sure we continue moving in the direction that we want to be moving versus what we're just expecting, because, you know, when you expect the worst and you get the worst, it's not a good thing. So let's make sure that we're moving in the right direction. I'm still going to continue my strategy. I'm building up my cash reserves, adding little bits here and there, seeing as how the market fluctuates. And then if we do end up getting a drawdown, I will buy in heavier the more we draw down. Let me know in the comments below, do you think that this was a good sign today with the CPI? Do you think we are moving in the right direction? Do you think the Fed is actually going to pull off a soft landing with this? Let me know in the comments. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.